Hello, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. This is a morning Kickstart video for November 9, 2023, where I take a look at three of the major currency pairs. The first is the euro versus US dollar. The second is the dollar versus yen. And the third is the sterling versus US dollar. So let's get started. Today's video is like yesterday, where I take a look at the 4-hour chart first. And when we look back in time, this swing area right here between the 1.0674 and 1.0694 was home to a number of different swing lows and highs through this area right through here, where the market either found support or resistance in the ups and downs through here. And then we moved below, and we started to use this level as a ceiling before moving to the downside. We returned back to that area right through here the week of the October, 18th to the 25th or thereabouts. And then last week, the market came up to that area again. And Friday, we broke above it here, running up toward the 38.2% retracement of the move down from this high right here to this low right here. The 38.2 came in at 1.0762, and we fell short by about 7 pips up there. As most of you know, I like to see a trend type move. If the buyers are to take more control, get above the 38.2% retracement. It couldn't do that this week, and the price started to rotate back to the downside. Now, speaking of 38.2, the move up from last week's low to this week's high, this low right here to this week's high, we came down to the 38.2% retracement earlier this week, and then we broke below it, but only barely, and the market started to rotate back to the upside and falling short of other swing levels up here and trading here today. And as you can see, we've moved back into this swing area right through here between the 106.74, 106.94 level, and that's going to be our barometer, one of the barometers for trading here today. So we'll see if the price can move back above the 94 level and push to the upside, or move below that level and get below the 38.2. It's really a combination of both of those levels that we need to get to and through to increase the bearish bias in the euro versus US dollar. So that's the challenge for sellers here today, who are trying to take control in the short term, at least, to start the New York trading session. Looking at the hourly chart on the top side, we do also have the 100-hour moving average, which the price tried to hold support against earlier today, but could not. Once we fell below that level, the bias turned more to the downside, moving into the swing area right through here. So watch the 100-hour moving average, which is still rising here after the sharp move to the upside here. So it's not flattening or anything like that. So maybe that's a barometer for upside, but we can't stay above that 100-hour moving average. So watch that level. If we get above 107.058, maybe it opens the door for further upside in this currency pair. Now let's take a look at the dollar versus yen on the hourly chart. Here, what is of significance to me from a technical perspective is this area right here between with the 61.8% retracement of the move down from this high right here to this low right here. Also, the swing areas through here, swing area that really started way back here on, October 26th, and then we moved up to it here on October 31st before breaking to the upside and moving higher. On the way down, we did break below that level in volatile fashion here before rebounding and then moving below that level and moving to the downside. In trading yesterday, we came up to that area right here, tried to find resistance sellers here, couldn't do it, moved above it, and then came back down. We got to a low of 72 before rebounding quickly back to the upside and using this level as support here and here in trading here today. So the 74 to 74 area is going to be a level that I look as a reflection point or deflection point. If we deflected off of the point right through here and moved to the upside, so that is keeping more of a bullish bias. On the top side, we do have these other highs right here ahead of the high price that we saw in the month of October, up at 151.70.7. So the 23 level, the 39-ish type level, and then 151.70 on the top side. This is a 151 level, just a natural level. Also, it's more than that, because right here was when the FOMC rate decision occurred last week. That was on November 1st. And the price was traded at that 151 level right before the FOMC rate decision. And what did we do? We went straight to the downside, and we returned to it here in trading yesterday. and went a little bit above it, and then trading above and below it and trading here today. So I still consider it a nice natural level, and also a level that people remember from, well, that was a price right before the FOMC rate decision. Well, at least I do. So, and now you do maybe as well. So let's watch that level as a barometer in the short term for your trading today. It may give you some clues. Let's take a look at the sterling versus US dollar, and I'm looking at the hourly chart, but I scrunched it all together here just to show you this area right through here at 122.61 to 75. Go back in time to here and here and here. And then look at it here and here and here and then here before moving down. This area was a point of where the market either found resistance or found support against the area, moved to the downside and moved to the upside. We returned to it through here during this week. We broke above it, should have led to further upside momentum, but didn't. And instead, we went fast to the downside. And then in trading, like this is the hourly chart. So last week, on the unemployment day, we started moving sharply to the upside, breaking above that level, and we returned back to that level, those levels through here. This was on Tuesday's trade. In trading yesterday, the market moved below that level, but could not sustain momentum below the 50% retracement level. I'll get rid of all that. You get the idea of this swing area right here. And in trading here today in the Asian session, we tried to hold support against it. Right through here and moved back to the upside, but now we are moving below it and moving back into it. So watch, all that said, watch the 122.758 level. Maybe he'll give us some clues as far as bullish above, bearish below. We will see, but if the sellers are to take more control, we need to stay below that level. And push down toward the 50%, which we held earlier today, and also the rising 200-hour moving average. That would be needed to; those levels would be needed to be broken to increase the bearish bias in the sterling versus US dollar in trading today. Alternatively, if we get above the 75.8 level, could see a rotation back toward the broken 38.2 and the 100-hour moving average. It still continues to move higher. That level's at 123.16. In trading yesterday, the market came up to that 123.16 or to that 100-hour moving average. It was lower at the time, and found willing sellers against that level. So something about the 100-hour moving average. Are you surprised? I'm not. My name is Greg Michalowski. Good fortune with your trading. Bye bye now.